Mr. Chairman, I'd like to be able to talk for a minute about student loan servicing. There's more than $1 trillion outstanding in student loan debt, but the United States government does not actually go out and collect on these loans. This is handled by contracts with the United States government. We have private companies that are out there, private for-profit companies that are out doing the student loan servicing. Now, there are a lot of rules and a lot of laws around student loan servicing, things that they're required to do, things they're not permitted to do, that we have in some measured way tried to make sure that borrowers will at least be treated with some basic fairness. Now, I want to start this by thinking about what happens when you break your contract. Students or former students who can't pay on their loans pay a terrific price. You've documented they pay high fees, their credit is ruined, their paychecks are garnished, their Social Security checks can be garnished. In other words, one misstep on your obligation under your student loan, and you can be in real financial trouble and you can pay for it for a very long time. But what happens when the contractors that service our student loans don't meet their contractual obligations? Well, it turns out it seems that life is not nearly so harsh for them. Servicers like Sallie Mae, who's recently changed its name to Navient, have broken the rules, broken the law, failed their borrowers, and not lost a dime on their federal contracts. Now, in June, President Obama announced that the Department of Education would take steps to hold these servicers, these loan servicers, more accountable. And 2 weeks ago, the Department of Education followed through on that promise by announcing that it had renegotiated the contracts with the student loan servicers. Now, that's good news, but evidently the Department of Education decided that this should be done by paying student loan servicers a higher price for loans that are in active repayment and less for loans that are delinquent. So they've kind of changed the payment schedule. The problem is that these changes may not have the intended effect because the new arrangement sets such a high price for loans that are current. Servicers could make more money under the renegotiated contracts than they did under the old contracts without changing their behavior at all. For example, analysts at Compass Point ran the numbers and concluded that under the renegotiated contract, Navient, the Sallie Mae spinoff, would make an estimated $20 million extra every year going forward, even if it doesn't make a single change to treat any of its borrowers better or to comply with the law. So I don't get this. When Navient breaks the law, they get a new contract from the Department of Education that lets them make more money if they keep right on with business as usual. So what the heck is going on here, Mr. Leith?
Well, first of all, the contracts were renegotiated with the intent of incentivizing all of our servicers to do everything they can to make a borrower and keep a borrower current, not only active in repayment, but current. We modeled out the changes, and I'd have to look at the $20 million number.
Well, I'm sorry. So you modeled this out, and how much more did you figure out that they were going to make?
I don't have that with me. But I guess my point is...
Well, can you give me a ballpark here? Did you figure out that it was going to be more than $20 million?
We looked at it in the aggregate of our portfolio, not by individual servicer. So,
Navient has what portion of your portfolio?
They're our third largest servicer.
So here's one of your biggest servicers. Someone else has been able to run the numbers based on what you've published and shown that this servicer doesn't have to change a single thing and can make $20 million more a year by continuing to treat student borrowers badly? And you don't have any numbers on this?
Like I said, we have numbers on the aggregate portfolio.
Well, so what are your numbers showing the aggregate of the portfolio?
I will provide that. I don't have it on the top of my head.
Okay, so let me ask you this. Surely you know this because surely you did this analysis before you renegotiated these contracts. Did it show that in general they were going to make more money for doing the same thing, or they were going to make a whole lot less money if they kept doing the same thing?
No, it shows in general that they will make a little bit more across the portfolio, but the point is we want them to do a lot more. So
So let me get this straight. You break the law, you don't follow the rules, you treat the borrowers badly, and you all just renegotiated the contract to make sure that across the portfolio they're going to make a little more money if nothing changes?
we have 11 servicers. So,
but you told me this is across the portfolio.
Right.
Collectively, they're going to make a little more money for continuing, I presume, to break the law, to not follow the rules, and to treat borrowers badly. The idea of the renegotiation was to try to help the borrowers, not to make it worse or to make the servicers richer.
The intent of the renegotiation is exactly to help the borrowers. So we will measure the impact of this change over the next 6 to 9 months. And if we don't see significant improvement in the percentage of the portfolio that are in current repayment status, moving people from delinquency to in repayment, then we will reset prices again. But
You will reset prices again to do what? To pay them even more money for not making any changes? Mr. Leith, I do not understand a basic renegotiation that says you can continue breaking the law, but we're going to pay you more money for doing it.
With regard to the Navient, I mean, I think, and the breaking the law, issue, this came up when Secretary Duncan, said that we would complete a review within 120 days. That 120 days will be up in a couple of weeks, and we're on schedule to complete that review in the time frame that was committed to. I can't say that I am aware that our servicers are out there breaking the law.
You're not aware that Sallie Mae has admitted to breaking the law and that you have your agency, and I'm sorry, your title is you're the head of the student loan.
I'm the Chief Business Operations Officer.
Chief Business Operation for Federal Student Aid, right. And you're not aware that the servicers have broken the law?
I'm aware of the Navient settlement with Justice.
Which was a settlement because they did what?